Whenever Donald Trump and Volodymyr Zelensky meet, the world watches closely. Political tensions, economic strategies, and global stability are always on the line. But what about Bitcoin? In a world where financial markets react instantly to geopolitical events, Bitcoin has become a key player, often seen as a safe haven during uncertainty. This is Bitcoin Now, and this is today's video. Oliver speaking, and let's start with another video. If this meeting leads to renewed tensions or shifts in U.S. foreign policy, investors might flock to Bitcoin as a hedge against instability. On the other hand, if diplomacy prevails, risk appetite could shift, impacting how capital flows into crypto. The big question is, will this meeting push Bitcoin higher, or will it bring unexpected volatility? Let's break it down. Whenever Donald Trump and Volodymyr Zelensky sit down for a meeting, you can bet there's a lot more going on than just a handshake and polite conversation. The world is watching, and for good reason. The relationship between the US and Ukraine has been a central topic in global politics, and depending on how this meeting plays out, it could have major consequences, especially when it comes to financial and military support. One of the biggest questions surrounding this meeting is why it's happening now. With the ongoing war in Ukraine, Zelensky is undoubtedly looking for continued or even increased support from the US. That could mean more financial aid, more weapons, or simply reaffirming diplomatic ties. But the wild card here is Trump. He has made it clear in the past that he's not a fan of blank check aid to Ukraine and has often suggested that Europe should be carrying more of the financial burden. If he sticks to that stance, this meeting could set the stage for some major shifts in how the US approaches the war. Trump has been vocal about his opposition to endless foreign wars, and his stance on Ukraine has been somewhat unpredictable. On one hand, he's criticized Biden for sending billions to Kyiv without clear conditions. On the other, he's also suggested he could negotiate a quick peace deal if he were in office. That leaves a big question mark over what his real strategy would be if he wins the presidency again. Would he pull back support, forcing Ukraine to seek other allies? Or would he leverage aid to push Ukraine into negotiations with Russia? For Zelensky, this meeting isn't just about diplomacy, it's about survival. Ukraine depends heavily on Western support, and any signs that Trump might cut aid or shift U.S. priorities could send shockwaves through the country's war effort. If Trump signals a harder stance on funding, it could force Ukraine to accelerate its military strategy or look elsewhere for support. But if Trump surprises everyone and agrees to maintain or even increase aid, it would solidify the U.S. as Ukraine's strongest backer heading into a potential second Trump administration. At the end of the day, the real impact of this meeting will come down to what Trump actually says behind closed doors. If he indicates that Ukraine can still count on America, even with conditions, markets will likely stay steady. But if he suggests pulling back or shifting focus, expect reactions, not just politically, but economically, especially in sectors tied to defense and international trade. Whatever happens, this conversation is bigger than just two leaders in a room. It could shape the future of US-Ukraine relations for years to come. If this video gave you value, don't even think about leaving without leaving a like. Seriously, it costs you nothing, but it makes all the difference for the channel. Plus, the algorithm understands that you like this type of content and recommends more videos like it. So, do the right thing. Leave a like now and strengthen the crypto community. Political decisions have a way of shaking up financial markets, and when Donald Trump and Volodymyr Zelensky meet, it's not just governments paying attention. Crypto investors are watching, too. The question is, how could this meeting affect Bitcoin? At first glance, a discussion about war and foreign aid might not seem directly tied to crypto, but when you dig deeper, you realize that the global financial landscape is more connected than ever. One of the biggest concerns is whether Trump's stance on funding Ukraine will lead to broader economic shifts. If he signals a cut in U.S. aid, it could create instability in European markets, weaken confidence in traditional financial systems, and ironically push more investors toward Bitcoin as a safe haven asset. We've seen this pattern before. Whenever uncertainty spikes, people look for ways to preserve value outside of government-controlled currencies. On the other hand, if Trump doubles down on military and financial support, it could strengthen the dollar in the short term, possibly leading to a temporary dip in Bitcoin's price as traditional markets stabilize. Then there's the question of regulation. If this meeting somehow leads to new sanctions, financial restrictions, or even shifts in crypto regulations, that could have a direct impact on Bitcoin. Trump has had an unpredictable relationship with crypto. He's dismissed it as a scam in the past, but at the same time, many of his allies support blockchain innovation. If Trump sees Bitcoin as a way to bypass financial restrictions or counter government-controlled digital currencies, we could see a policy shift that actually benefits the crypto industry. Of course, institutional investors are watching closely. If this meeting suggests a more unstable geopolitical environment, major funds might start moving into Bitcoin as a hedge, just like they do with gold. The more Bitcoin is seen as an alternative to traditional finance during crises, the stronger its position becomes. But if the outcome of the meeting signals stability and predictability, institutional money might lean toward traditional assets, keeping Bitcoin's price in check, at least for now. At the end of the day, markets love certainty, and crypto thrives on disruption. Whether this meeting fuels uncertainty or reassures investors, Bitcoin will likely react in some way. The key question is whether it will be a temporary move or a long-term shift in how investors see Bitcoin's role in a rapidly changing world. The war between Russia and Ukraine has sent shockwaves through global financial markets, and the crypto market is no exception. Whenever there's geopolitical instability, investors start looking for safe havens, and Bitcoin, often called digital gold, has been one of the assets that gains attention. But the relationship between crypto and war is more complex than just people rushing to Bitcoin during times of uncertainty. One of the first ways the war has impacted crypto is through financial restrictions and sanctions. When Russia was hit with harsh sanctions, including being cut off from parts of the global banking system, both individuals and even some businesses turned to Bitcoin and other cryptocurrencies as an alternative. This reinforced one of crypto's core strengths. It operates outside of traditional banking systems and can't be easily censored. At the same time, Ukraine also embraced crypto in an unprecedented way, raising millions of dollars in Bitcoin, Ethereum, and stablecoins through international donations. This marked one of the first times in history that a country openly used crypto to fund military and humanitarian efforts, proving that decentralized money can play a real role in global conflicts. But wars also create uncertainty, and uncertainty often leads to market volatility. When the war escalated, global markets, including crypto, saw significant sell-offs as investors fled to safer assets. In times of crisis, people still tend to trust gold, cash, and government bonds over crypto, which is why Bitcoin and other digital assets saw sharp corrections in early 2022 when the invasion began. However, as the war continued, crypto started playing a new role, not just as an escape from traditional finance but as a tool for financial resilience in regions affected by conflict. If you want to stay up to date with everything that's going on in the world of Bitcoin, this is the right channel for you. Here we bring you what really matters, without any fuss. So, don't waste any time. Subscribe now and activate the bell so you don't miss out on the next market opportunities. Regulation is another key area that's been influenced by the war. Governments saw how easily both sides used crypto to bypass sanctions and move money globally, which led to increased discussions about tighter regulations. The US, Europe, and other major economies have since pushed for more oversight on crypto transactions, especially when it comes to large cross-border transfers. If stricter rules come into play, it could limit the way crypto is used in geopolitical conflicts, but it could also drive more institutional adoption as governments and banks begin to integrate blockchain technology into their systems. At the same time, the war has highlighted the true value of decentralized finance. Ukrainian citizens, facing a collapsing financial system, were able to store their wealth in Bitcoin and stablecoins, avoiding bank freezes and currency devaluation. This has only strengthened the case for crypto as a lifeline in unstable economies. The long-term impact of the war on the crypto market will depend on how the conflict evolves and how governments respond to the growing use of digital assets. One thing is clear: crypto has proven itself as more than just a speculative asset. It's becoming an essential financial tool in times of crisis. Whether for fundraising, escaping financial controls, or preserving wealth, the war in Ukraine has shown the world that Bitcoin and other cryptocurrencies are here to stay. Wars disrupt everything: economies, financial systems, and even the ability to move money across borders. When traditional banking systems collapse or become heavily restricted, people need alternatives, and that's where Bitcoin steps in. Unlike fiat currencies that rely on banks, Bitcoin operates on a decentralized network, meaning it can be transferred instantly, without needing approval from any government or financial institution. In conflicts like the Russia-Ukraine war, Bitcoin has already proven its real-world usefulness. When Ukraine needed urgent funds for military and humanitarian aid, millions of dollars in Bitcoin and other cryptocurrencies poured in from supporters around the world. This was possible because Bitcoin doesn't require intermediaries. There's no need to go through a bank, worry about sanctions, or deal with bureaucratic delays. The money moved fast, transparently, and efficiently, showing that Bitcoin can be more than just a store of value. it can be a lifeline in times of crisis. On the other side, Russia faced severe financial sanctions that cut many of its banks off from the global system. While some feared that Russia could use Bitcoin to bypass sanctions, the reality is more nuanced. Governments closely monitor large transactions, making it difficult for entire economies to rely on Bitcoin. But for individuals, ordinary people caught in the middle of war, crypto became a way to protect their savings, send money across borders, and escape financial restrictions. In times of war, when governments seize bank accounts, impose capital controls, or freeze assets, Bitcoin remains one of the only options for financial freedom. The biggest advantage of Bitcoin in wartime is that it's borderless. A person fleeing a conflict zone can carry their wealth just by memorizing a seed phrase or keeping a digital wallet on their phone. No one can confiscate it, no government can freeze it, and no bank can block it. This is a game changer for refugees, displaced populations, and anyone needing to move money under extreme conditions. Of course, Bitcoin isn't perfect. It still faces price volatility, scalability challenges, and regulatory scrutiny. But when the alternative is having no access to money at all, the ability to move Bitcoin across the world in minutes becomes incredibly powerful. War exposes the flaws in traditional financial systems, and Bitcoin offers a decentralized, censorship-resistant alternative. It's not just an investment or a speculative asset, it's a tool for survival, financial independence, and freedom when people need it most. Sanctions are one of the most powerful tools in global politics, used to cut off a country's access to the international financial system. When a nation faces sanctions, its banks can be frozen out of SWIFT, international transactions become nearly impossible, and its economy can quickly collapse. But with the rise of cryptocurrencies, many have started asking, can countries in conflict use crypto to bypass these restrictions? The short answer is yes, but with limitations. Cryptocurrencies like Bitcoin, Ethereum, and stablecoins operate on decentralized networks, meaning no government or financial institution can directly control or block transactions. This makes them an attractive option for nations looking to work around sanctions. In theory, a sanctioned country could use crypto to conduct trade, accept payments, and store wealth without relying on the traditional banking system. However, in practice, it's not that simple. While individuals and smaller entities within sanctioned countries can use Bitcoin and other cryptocurrencies to move money, large-scale transactions are much harder to hide. Governments and regulatory bodies track blockchain activity closely, and major exchanges are required to comply with Know Your Customer (KYC) and anti-money laundering (AML) laws. If a government or company tries to convert large amounts of crypto into fiat currency, it usually gets flagged. We've already seen examples of this. When Russia was hit with massive sanctions after invading Ukraine, some worried that Moscow would turn to Bitcoin to keep its economy afloat. But in reality, the Russian government couldn't move billions in crypto without drawing attention. Instead, crypto became a tool for ordinary Russians trying to protect their savings from a collapsing ruble and government-imposed financial restrictions. On the other hand, smaller groups and blacklisted organizations have used crypto to evade sanctions on a more limited scale. North Korea, for example, has been linked to hacking operations that stole millions in crypto, which were later laundered through decentralized exchanges and privacy coins. These cases show that while crypto can be used to bypass restrictions, doing so on a national scale is much harder than it seems. At the end of the day, crypto isn't a magic loophole for sanctioned countries, but it does challenge the traditional financial system. While large economies will struggle to use Bitcoin for full-scale trade, individuals within those countries can and do use crypto to escape financial repression. Whether this leads to tighter regulations or a broader acceptance of decentralized finance remains to be seen, but one thing is certain: crypto has changed the game in global finance, and governments are paying attention. If you want to take your knowledge about Bitcoin to the next level, click on this video that's on the screen now. It's another essential content for those who want to be ahead in the market. Don't miss this chance.